My first introduction to the DOM was back when I worked in technology for one of the big banks. A trader was having some software problems and they asked me to help them. And I was super excited because this was the first opportunity I had while I worked for them to speak to one of the traders. So I told them about my desire to trade and they showed me what they did. Now, there were no charts or any of the things that retails typically associate with trading. It was kind of funny because I had just finished the technical analysis of stock trends. I was ready to talk about stock patterns, and it turned out that they didn't actually use that in their trading at all. I knew more about chart patterns than they did. Instead, they had a DOM on their screen, and they told me if you really want to trade, you need to learn how to use the DOM. Now, unfortunately, becoming an institutional trader didn't work out for me. There was this whole London whale fiasco where a tech guy turned trader used what he knew about their systems to bypass their risk controls and put on huge trades. And one of the things that I worked on while I worked for the bank was on the risk control systems. So yeah, that wasn't going to happen. But it's okay because eventually I left the firm and I set about learning how to trade on my own. I knew where I needed to start, so I learned how to use the DOM. The DOM is a useful tool because it is the most comprehensive and efficient way to display everything about current market conditions. With the DOM, you can see all the orders, you can easily monitor multiple markets at once, and you can quickly place and modify any type of order you need instantly. It is an essential tool that I could not trade without. However, it's also a very difficult tool to learn, but that's why you have me. So this video will be the first in a series of videos about how to use the depth of market and read order flow. In this video, we'll talk about what the DOM is and some general pointers about what to look for when you're watching the DOM. In future videos, we'll talk about specific types of situations, types of markets, and proven order flow tendencies based on scholarly research. We'll even pull out the chalkboard, so make sure you're subscribed for those future videos. Now, before I get started, there's a few important things that you should keep in mind. First, understand that my intention in these videos is not to give you setups. I want you to understand what you are looking at on a deep level so that you can come up with your own setups. This is important because the market is always changing and I want you to be able to change with it. Also want you to understand that as powerful of a tool as the DOM can be, it is not everything you'll need. Nothing can beat being an informed trader, and that means you need to understand what is going on in the financial world and incorporate that into your analysis as well. I also want to acknowledge that there are many other great learning resources on the DOM, and this series is not meant to replace them. I'm going to be giving you information that I'm not seeing anywhere else and that I feel will really enable you to understand order flow on a deep level, and that's going to further enable you to understand and get more out of other resources. I first started DOM trading by reading the No BS Trading Beginners course. I still think that's a great course with a very fair price. John Grady, the creator of that course, also has a few free videos that are great to watch. I don't have any kind of affiliate link with Grady or anything like that. I just think he made a great course. Jigsaw Day Trader also has a lot of good education materials available. In fact, they're coming out with some new materials soon. Peter won't let me see them yet, but I'm sure they'll be good. Now, Jigsaw is the software that I use for my own trading, and that's what I'll be showing for examples in my video. What we talk about will apply to other popular futures trading DOMs like Sierra Charts, Trading Technology, or Quant Tower. I just think that Jigsaw is by far the best DOM, and that's what I use. If you do purchase Jigsaw, I have an affiliate link in the video description. This is not a sponsored video, but I do get a commission if you purchase Jigsaw through my affiliate link. Your support really helps me produce better content for the channel, so I really appreciate it. So, with all of that out of the way, let's begin. What is the DOM? Well, It's this that you see on your screen right now. Now, if you're new, this might look like a ton of random numbers, and that can be a little intimidating. I always like to joke when people ask me how I trade. Well, I just try and put as many numbers on the screen as possible, and then when a number really stands out to me, I click on it. Don't worry though, it's really not as difficult to understand as you might think. To explain what's going on though, let's try and get away from the virtual world and try and talk about something a little bit more concrete. Imagine that the DOM is a long hallway full of traders and they're trading something, let's say cookies. Okay, so they're trading cookies, and on the right side, we have traders that each have a cookie that they want to sell. To keep things both fair and competitive, they line up in single file lines based on what price they want to sell at. All the traders that want to sell their cookies at $10 are in one line, and next to that is a line of traders that want to sell at 11, and so on, so forth. There are also traders in the middle, and if one of these traders want to buy at that very instant, then they can walk up to the lines and buy a cookie from the first trader in the queue. Such a buyer will want the best price they can get, so they're going to buy from the $10 line, right? Now, if enough people buy, all of the cookies in the $10 line will be gone, so subsequent buyers are going to have to buy at $11. Well, what if you don't want to buy at $11? You still want to buy at $10. Well, that's why on the left side of the hall, we have lines for people that want to buy at a specific price. There's a line to buy at $9 and $8 and so on and so forth. Since there's nobody in the line to buy at $10, you start a new line in the hopes that you will get customers. What I'm describing is a lot like how the old trading floors work, except for they used pits and it wasn't quite so organized. But that's what we're watching real time on the depth of market. The lines that we talked about are called limit orders, an order to buy or sell at a specific price. On our DOM, the orange-red column is for limit sell orders, and the blue column is for limit buy orders. The number indicates how many orders are in the queue at that price. Now, my DOM also has two middle columns to show the market orders being submitted to fill the limit orders. So when you submit a market order, we call that hitting. For instance, a market sell order is hitting the bid. So now that you understand a little about what the information on the DOM is showing you, you'll want to start putting in screen time. On my channel page, I have a playlist of every live stream I've done in the past 4 years. I'll also link it in the video description, so you have plenty of order flow to look at. Just pick a day that interests you and just watch the DOM in the video. It's a lot of work, but getting that screen time is a very important part of learning how to use the DOM. So when you look at high frequency trading firms, they're often plugging this data into a neural network. They're basically mimicking how our own intuitive learning works, and they have to use such solutions because markets are always changing. That's why it's important for us to practice by watching order flow. Now, of course, I'm not just going to throw you to the wolves without giving you a few pointers. So here are some tips on what to look for that will help you get more out of watching the order flow. Think of what you are seeing as a set of flows, and these flows correspond to the different actions that market participants can make. You can submit a market order, you can submit a limit order, and you can cancel a limit order. We often forget about that last one, but it's really important. If you do the research, you will find that there are more limit cancel orders than there are limit add orders, and those cancel orders often have a strong influence on where price ends up going. Now, on top of that, you can buy and you can sell. So that gives us 6 different flows or forces. Sometimes I find it's useful to just list through those 6 different forces and say, what have they been doing recently and what might they do in the future? The next thing that you should keep in mind is that a lot of activity is just about getting a good spot in the queue. It is common for some systems to place orders at every price and then pull those orders if there's a risk of them being executed. They're just saving a spot in line in case they need it in the future. And so because of that, you'll always see a certain amount of stacking and pulling when price moves, and you'll need to discount that. Which of course means if you don't see that behavior when price moves, it might be something you want to pay attention to. Keep an eye on correlated instruments. A lot of market making is based on arbitrage strategies where they use correlated instruments to decide if they want to take fills at that price or not. That's why you might see a certain price defended with lots of limit orders at one point, only to see them blow through that price without hardly any resistance at all later. It's just the correlation changed. So watching multiple instruments allows you to see if the action is based on a correlation or if it's something that's isolated to that specific market. Having a DOM with a recenter function is absolutely essential. When you recenter the DOM, you are making a reference point that can help you track the differences between all of the instruments to see which ones are going up and which ones are going down. Particularly useful on the treasuries where I trade so that you can see spreads. Don't get too excited about large trades. This is one of the most common mistakes I see people make when they're just starting out. Or maybe it was just the biggest mistake that I made when I was just starting out. It's really easy mistake to make though. You see tons of volume and you think, oh, this is it, something is happening. Unfortunately, what it often means is that something already happened and you missed it. Such large transactions can have a negative impact on latent liquidity because basically everybody that wanted to trade has already been filled, and this can actually hamper movement. So think more about predicting and making your move before the big order comes rather than trying to make moves after you see them. Unless it's a trend day, and then you should just always follow the trend, but that's only like 2 out of 10 days. Last, you should keep track of the context around the order flow. Follow the macroeconomic environment, breaking news, and key daily technical levels. Note how changes in the context affect the order flow and form theories about what may be causing the current order flow, and search for new information to support or reject these theories. The real vulnerability to this strategy is when you don't really understand that particular market. So it's really important that you build up this skill and that you do as much research as possible. That's how you learn how to predict and anticipate future order flow. It will also help you identify information that hasn't been properly factored into the market yet. So many retail traders want to ignore this stuff, but it is the doorway to some of the strongest edges that you can have. Remember that informed traders always have the advantage. Being informed and knowing how that information will translate to future order flows is a powerful skill, and that's what truly makes learning how to read the DOM worth it. So with that, good luck as you get started reading the order flow. Make sure you're subscribed and hit the bell icon so that you don't miss the next videos in this series. If you have any questions or tips of your own, please put them in the comments and I'll try and address every comment. I'll see you guys during the morning live stream, and in the meantime, stay profitable, friends.